Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns and derivatives data, and we'll try to figure out what will be the trend for the next week. Now first of all, let us discuss what you have mentioned in our last video and couple of videos back. We have mentioned that uh, I mean to say India VIX and CBOE VIX were taking lots and lots of resistance around its long-term resistance trend line, and from there we might see some sort of topping out of this VIX, and we might see a sign of bottoming up of the markets, of the global markets, and that we have seen happening or coming into the picture of last couple of days. Before that, we have seen that Nifty was stuck in a range of 16,825 on the downside, and on the upside 17,225. For 12 long trading session, Nifty remained in this particular range, and we have seen that breakout coming in decisively, supported with strong volumes, supported with the heavyweight stocks of Nifty. I mean to say Nifty 50 and Sensex 30 stocks, and that supporting of volume also came from the FIIs in the last 4 to 5 trading sessions. So we were already looking out for some sort of bottoming out process around 16,900 mark, and from there we have seen Nifty had rallied sharply in a very short span of time. So friends, let us check out the Nifty daily charts, and we'll try to figure out what could be the trend for the next week. Now let us discuss the Nifty daily charts. You will see on the screen the Nifty daily charts. This is, I mean to say, the Nifty daily charts, which we have been discussing since last 4 months. Nifty has been moving into a falling trend line with a falling channel setup. You can see on the screen, making low tops, low bottoms, and whenever the Nifty has tested those, or we have tried to test those resistance trend line, we have seen selling pressure coming at the higher levels. So now almost currently Nifty has closed around 17,600, and the upward resistance trend line is coming around 17,757, or we can take a magical number of 17,777. So at this juncture, you can see in the last 5 trading sessions, Nifty had rallied sharply in a very short span of time. On daily charts, RSI is still in the comfort zone, but on the hourly charts, I will show you Nifty has entered into uh, a slightly overbought setup. You can see here RSI is just trading around say 80 odd marks, and this is an overbought setup. So we might see some sort of cool off coming into the markets. I'm not saying it could be a sharp fall, but some sort of cool off, or in the sense of profit taking at the higher levels. So at this juncture, one needs to be a little bit cautious. Those who are swing traders, those who are option traders, for next 4 to 5 trading sessions, or at least for the next next week's expiry. So you can see this is the daily charts. Nifty has broken out from this particular range decisively, supported with strong volumes, and now the upward trajectory could be 17,777, where we might see some sort of pause or a cool off coming in at this level. But already, as I said, on the hourly charts, Nifty has entered into uh, overbought setup. So maybe around 17,650 or 17,700 mark, we might see selling pressure coming in, or we might see this particular blue horizontal line, which is 17,706 mark. If it tests those levels, and then we might see selling pressure coming or profit booking coming in at those levels. So one needs to be cautious. Those who are long should try to book profits at the higher levels, and should wait for some reasonable correction, and from those level one can, after correction, those people can try to enter long at the lower levels. So now looking at the support and resistance level in Nifty for the next week, we can find out what could be the strong area where one can try to go long at the lower levels. So now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is around 17,502. Below that, the second support is coming around 17,200 and 402, and below that, the third support is coming around 17,312. On the upside, the first resistance is around 17,717. Above that, the second resistance is around 17,000, almost 800 mark, and third resistance is around 17,888. These are the important supports and resistance level in Nifty for the next week. And as I said, looking at to the supports and resistance level, we feel that the strong support on the downside could be between 17,500 and 17,400. This could be the comfort area where one can go long or build long at the lower levels. At this juncture, one should wait for some sort of profit booking at higher levels. So one should not go aggressively long at this level. One should wait for some sizable correction and then try to enter long at the lower levels. So this is a view which we are having at least for the next week. So now let us check out the derivative data of Nifty, and we'll try to figure out, depending upon the volumes, the open interest, the strike prices, what could be or which could be the levels could act as a strong support, and which strike price could act as a major resistance area. So firstly, let us discuss the Nifty call data. You can see the action was seen in 17,700 calls, then 17,800 calls, 17,900 calls, and 18,000, which is the psychological mark. So most probably, looking at this particular data, the implied volatility is low. That means still the undertone, looking at this particular implied volatility, is still bullish. But as I said, on the hourly charts, it is overbought. Now looking at this particular data, you can see that there has been a rise in the open interest, rise in the volumes. The percentage change is negative, but it is not that much negative that we might take a call that strong out of the money call writing has been done. But most probably, if we see, looking at this particular data, and as I said, that 17,700 could act as a major resistance. You can see the concentration of volumes and the rise in the open interest, and next level could be 17,800, where the major downward falling resistance trend line is situated or has been marked. So almost for next week, 17,800 could act as a major resistance. Before that, Nifty needs to break 17,700 mark. So hardly 100 points from here, Nifty might see selling pressure coming in at the higher levels. So looking at this data, it is into a comfort zone, but as I said, 17,700 could act as the immediate resistance, and above that 17,800 could be the next resistance. And throughout the month, for the month of April, I feel 18,000, which is the psychological mark, could be the target for this monthly expiry. So one should, if anybody wants to play for 18,000 expiry, one should look out for some correction. And those who are swing traders or positional traders, or those who are monthly traders or monthly expiry traders, should wait for some 150 or 200 point correction in Nifty, and then try to play for 18,000 expiry for the month end. So this is most probable data analysis of derivatives in Nifty. Now let us discuss what we have observed in Nifty puts. In Nifty puts, the action was seen in 17,500 puts, then 17,400 puts, 17,300, and 17,200 puts. Now here you can see there has been rise in the open interest, rise in the volumes. Implied volatility here is also into a comfort zone. It is between 10.04 to 11.48. But here we have seen some sort of out of the money put writing. There has been a drop in the option premium. So out of the money put writing is indicating that still the undertone is bullish. And as we have seen in Nifty call also, there is Still long built up in the Nifty out of the money calls. So on the upside, 17,700 could act as a major resistance. Above that, 17,800 could act as a major resistance. But looking at this data, we feel that looking at the open interest, implied volatility, and the volume concentration, we feel that the support might come in between 17,500 to 17,400. That could be the area, so where one should try to look out for building long positions. So I will wait for 17,400 and then we'll try to look out for building up long positions. At this juncture, Nifty might trade slightly sideways to negative, not highly negative or severely negative, but slightly negative. That could be in the sense of profit booking. So as I said, on the upside, 17,700 could be the resistance, immediate resistance, and on the downside, 17,400 could be the strong area where the monthly traders or swing traders can try to build long positions at the lower levels. Now, let us check out the Bank Nifty daily charts. In Bank Nifty daily charts, we will try to figure out what was the trend and what could be the extension of trend from these levels. Now, I'm sorry. This is the Bank Nifty daily charts. You can see Bank Nifty has already broken or sustained or closed above this downward falling channel resistance trend line. This is the first time it has closed in the last 4 months. You can see it has taken attempt first, second, third, fourth, fifth. In 5 attempts, it has never closed above this resistance trend line, but in the sixth attempt, it has taken or it has closed above the resistance trend line. But the interesting fact is that it has already closed, but the daily pattern is not comfortable. It is, you can call it a inverted hammer with a long shadow on the upside. So in Bank Nifty, if it breaks the low of the Friday's trading sessions, that is 40,820 on the spot. If Bank Nifty breaks 40,820, then one should exit long, or the swing traders or momentum traders can would buy Bank Nifty puts of the strike price of 40,900 for an immediate pullback, maybe of around 40,300 to 40,200 mark. But only if it breaks 40,820 on spot, swing traders can go short in Bank Nifty, or one can buy, or option traders can buy at the money puts maybe around of 40,900 for a target of 40,300 at least for the next week. But one should wait for Bank Nifty to break 40,820 mark on the daily basis. Now this is the daily charts, and as I said, RSI is also in comfort zone on the daily charts, but as I said, it has entered into overbought territory on the hourly charts. Now this is the hourly charts. You can see the struggle, prices were going up, but you can see RSI was making lower tops. It is a classical example of negative divergence. So negative divergence indicates that some sort of profit booking cannot be ruled out. So aggressive long traders should try to avoid trading long at this juncture. One should wait for some correction. And looking at the charts, I feel that 40,300 would be the ideal level where the swing traders can try to enter long if there is a correction in the next week. So one should look out for these levels. One should not aggressively short at the open of the trade on Monday. One should wait for Bank Nifty to break 40,820 mark on the spot and then try to go short, try to book profits, and try to the option traders should try to buy puts of at the money puts. I would recommend to buy at the money puts, so that there should not be a fast theta decay and one can trade the rally. I mean to say, trade the pullback rally on the downside. So I would recommend, if it breaks 40,820, one should buy 40,900 puts for the target of 40,300, and in between one can book profits. And depending if the If there are smart traders can try to book profits, again go short at the higher levels, and one can trade in that particular manner. Now let me just go to the larger degree charts, which is the monthly charts in Bank Nifty, and we'll try to figure out what is the larger degree trend. This is the monthly chart, and you can see Bank Nifty is already trading inside month. So a decisive breakout is around 40,671 on the spot. If Bank Nifty closes above 41,671, then we can take a call. Then Bank Nifty will uh, break its lifetime high of 44,151, and you have already seen that the big brokerage firm, the foreign brokerage firm Goldman Sachs, has already given a Nifty target of 20,000 in next 12 months. So these are the signs where the brokerages are also turning bullish. FIS has already turning bullish, already started buying strongly, and markets are already rising upward trajectory in a very short span of time. You can see Bank Nifty has rallied from 39,400 to 41,300 in a very short span of time, in hardly a 5 trading sessions. It is a classical example of a faster retracement. Now, friends, now let us check out the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is around 41,000. 802 is the first support. Below that, the second support is around 40,535, and the third support is around 40,055. These are the spot levels. Now, on the upside, the first resistance is around 41,275, which is the swing high of the last week. Above that, the second resistance is around 41,555, and the third resistance is around 41,979. These are the important supports and resistance level in Bank Nifty for the next week, and traders should try to follow this or look out for this level. And as I said, one should wait for a decent correction and then enter long. But at this juncture, as I said, one should wait for Bank Nifty to break 40,820. Why I am saying this is a crucial level? Because there is a formation of inverted hammer on the daily charts, and if it breaks 40,820, then we might see a sharp fall for the target of 40,300 in next week itself. So now, friends, let us check out the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 41,200 calls. Above that, 41,500 calls and 42,000 calls. Now here you can see there has been a rise in the open interest. There has been a strong change in the percentage change in the premiums. There has been a strong drop in the percentage premium. You can see the implied volatility is between 10.13 to 10.47. Now, looking at this data, I feel that on the immediate basis, 41,200 could act as a major resistance, and if it breaks, then the next strong resistance is around 41,500. So most probably 41,500 could act as a strong resistance. I don't think that in next week Bank Nifty might break 41,500. So we might see selling pressure coming between 41,200 to 41,500 on the upside. And as I said, one should only go short below 40,820. Now, looking at this data, we feel that the selling already out of the smart money has started writing out of the money calls. So upside is minimal, at least for the next week. We might see selling pressure or profit booking coming in at the higher levels. Now let us discuss the Bank Nifty put data. You will see on the screen, in Bank Nifty put, the action was seen in 40,800 puts, 40,500 puts, 40,000 puts, and you can see in 40,300 put also. Now here you can see, again, there has been a sharp drop in the option premium. That means smart money has already made a decision that next week could be in a broad range. Bank Nifty could be trading in a broad range. There has been a writing in the Bank Nifty out of the money calls, and there has been a writing in out of the money put also. So Bank Nifty might trade sideways to down at least for the next week. So uh, the bullish traders, or those who are bullish, should try to be little cautious, to try to book profits at the higher levels. Now looking at this, the volumes and open interest data, I feel that on the downside, immediate support is at 40,800, and next support is at 40,500, and then 40,300. But as I said, one should wait for some decent correction, uh, and one should try to enter long between 40,400 to 40,300 mark. If Bank Nifty breaks those level, then only we might see further sell off. But as I see, looking at this data, I feel that Bank Nifty, if there is a correction, Bank Nifty might take a pause between 40,400 and 40,300 mark. So these are the areas there for the swing traders can go long if there is a correction, which we are expecting at least for the next week. So one needs to be cautious. So overall, looking at the charts of Nifty and Bank Nifty, option data of Nifty and Bank Nifty, the strategy should be buy on dips. But at this juncture, those who are option traders, those who are swing traders, first of all, they should try to book profits at the higher levels on immediate basis, wait for some decent correction, and then enter long for a upside uh, trajectory or upside targets for the monthly expiry of April. So, friends, now let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is Aditya Birla Fashion. The stock has been hammered down sharply, and almost we have seen a sharp sell-off in the stock. Almost the stock has corrected more than 50% from its uh, we call it a yearly high. You can see the top was 360. It has already corrected and made a low of 200. Now you can see a sharp fall in this particular stock. I'm not saying that this could be a trend reversal in the stock, but after a deep correction, you can see on the daily charts that when the prices were going down, the RSI was making higher highs. So it is a classical example of a positive divergence. Now you can see on the daily charts the stock has formed an engulfing bullish pattern after a 50% drop, from more than 50% of drop from its lifetime high. Engulfing bullish pattern with a strong volume. You can see this is the highest volume registered since last maybe almost 1.5 years. You can see. So smart money might have entered in this stock. I'm not saying this is a trend reversal. This is, I'm just suggesting for a counter rally or a pullback rally from these levels. I am expecting a stock to test this particular region of maybe around 240 odd marks in short to medium term. A short to medium term could be maybe for next 1.5 to 2 months. So price volume action is positive in the deep oversold territory. Positive divergence on RSI. Short-term investors or swing traders can buy the stock on dip. Currently, the stock is quoting around 215. Traders or short-term investors can buy this stock on corrections to 205 or 207 for an upside target of 240 in short to medium term. Short to medium term trade means at least for next 1.5 to 2 months. So it is a highly risky trade because the stock has been into a downtrend. I am expecting a counter rally from these levels. We're looking at purely based on positive divergence on RSI, uh, engulfing bullish pattern supported with strong volume, which has been seen in the last 1 year. So a strong counter rally cannot be ruled out from these levels. So again, I would like to say positional traders can buy this stock on dips to 207 for an upside target of 240 in short to medium term. So Thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week.